I'm going to introduce the panel. We've got Yvonne with FMO Investment Management, who has extensive experience investing in Africa. Vivina with Sarona Asset Management, who has experience both as a GP and an LP, and Sandeep with Alexander Forbes Financial Services. So, fantastic panel with great experience. We're going to talk about mainstreaming private equity as an investment strategy for pension funds. What does that actually mean in practice? And who are the key players that can help facilitate that? So, kicking off with Sandeep, could you give us some idea about how much money we're actually talking about in the African private equity space, for African private equity pension fund money that can go towards private equity?
Okay, it's not often that I get a chance to share a panel with three lovely and distinguished ladies, so it's a great joy as well as a privilege. Now, obviously, there is a lot of excitement around private equity as an investment class for pension funds, and and if we look at the points that Razia Khan made this morning in terms of the African economy, the high and sustainable growth rates, increasing urbanization, growing middle class, as well as favorable demographics, there's a very compelling case for African pension funds to look at private equity as one of their asset classes, because that's one way they can get a share in the growth stories of their countries. And if we look at the total asset base of pension funds in Africa, I don't have the figures for the whole of Africa, but perhaps for sub-Saharan Africa, the total asset base would be of the order of $300 to $320 billion. Okay? Now, for many of these funds, the regulations permit perhaps up to about 5% of the fund to be deployed into private equity, and this would suggest about 15 billion or thereabouts. Some of the larger funds, such as the Government Employees Pension Fund in South Africa, has an asset base of close to 120 billion US dollars. Now, this fund can invest up to 5% of its assets in private equity and outside of Africa. And this would suggest that that fund alone could invest close to $5 or $6 billion in private equity. But having said that, I feel that, look, I don't anticipate or expect, at least in the short to medium term, for there to be a massive wave of investment in private equity amongst the pension funds in Africa, and perhaps we can discuss some of the reasons why in the course of our discussion.
Absolutely. So that's a good segue into discussing what exactly does mainstreaming mean for private equity. And Yvonne, would you like to start us off?
Yes, sure. As a DFI, we are often applauded for having been among the pioneers of African private equity. And of course, that's good to hear, and it's a great role to play, but it's a role we don't want to play forever. And mainstreaming for me really means that institutional investors, local institutional investors, but also international institutional investors, should really include Africa in their allocations. And mainstreaming, it means also it should not be restricted to a very small pocket of exotic investments or impact investments or something like that. It should just be commensurate with capital, market capitalization. It should be a regular part of the investment.
Okay, so Vivina, assume I'm a very skeptical Ghanaian pension fund manager. I'm sitting on pots of money. I prefer the kind of certainty of bonds, cash, perhaps a few equities here and there. What do people need to do to help me go mainstream in private equity? What's needed?
Oh, what a wonderful question. Can I just ask, do we have any pension funds in the audience? Before I say anything really, really wrong.
Especially Ghanaians.
Okay, that looks like a no. Okay, so I can speak freely, knowing that nobody's listening. So, what would I say to us? Well, you know, it's funny because I don't think I would say anything different from what I used to say to a very skeptical pension fund in the UK about 15 years ago. So I used to work with Merrill Lynch Investment Manager. I was one of the early directors for their private equity programs. And one of the roles for that job was to act as an educator of pension funds, trustees, who did not have any allocation to the private equity asset class. And what would we say? We would say, first of all, that private equity can generate returns that are in excess of listed equity, and that therefore it's an asset class that needs to be taken seriously. But in the same breath, and I'm sorry if they're cynical, but I'd always think that it's better to qualify promises of great returns by saying that all those returns are not available to everybody indiscriminately, and that it requires significant skills in generating those premium returns. And somebody on an earlier panel this morning said it. There is, on average, everybody's very good. But the truth is that averages hide a multitude of sins. And there is about 25% of private equity managers that are able to do great deals and generate great returns. And then there is 75% that do from average to worse and lose you a lot of money. So to a cynical person, I would say, look, it can be done. You should do it, because it also diversifies, it also generates and puts capital into parts of the economy that ultimately will be constructive for all stakeholders, but tread with care.
Okay. So I'm gradually coming around to the idea of private equity as the skeptical pension fund manager. I could get better returns. What else could sway me?
I think I just want to add to what Vivian has just said. I mean, there is a challenge to many African pension funds, and as investment advisors, when we motivate for some exposure to private equity, the question that often gets asked is, what is the track record? What is the historic return? So now there's very limited information available. The only study that we know is the one that's been done by Cambridge Associates, a fairly good study, which suggests that over the last 10 years, private equity funds in Africa have delivered a return of 11%. So when I'm talking to a trustee of a pension fund in Kenya or Nigeria, where government bonds would get me 10 or 11% or more, why would I want to make that foray into private equity with all its higher risks, its requirements for due diligence and governance?
This is the key challenge of selling private equity in Africa. And I was really, I like the presentation about the Africa 8, because this is key. It's not about the past, it's about the future. And when you talk to pension funds who are used to look at realized historical track records, that's a tough call, because looking at 11%, I wouldn't be convinced. So you need to look towards the future. Also, Vivina's point is very right. You need to do manager selection in such a way that you don't get stuck with average private equity performance, because this 11% is average performance. And it wouldn't have exceeded listed equity performance, I guess. So you need to have the top quartile managers in your portfolio to really make a difference. So apart from the possibility of superior returns, there's diversification benefits in answer to your question. But also, and of course with my background as a development banker, I should be the one to mention this, but luckily I also get this feedback from pension funds I talk to in Africa and in Europe, that as a pension fund, even though obviously you're not a charity, you do have a societal responsibility as well. And I've talked to African pension funds who really like private equity because it does more than provide money. It also transfers knowledge, it builds capacity, it builds better businesses. So there's more to it than just the financial gain. And that's an element that I think could not be emphasized enough.
I think that's a good perspective, if I may add, to give to some of the larger public sector pension funds who have some sort of obligation to invest on socio-economic grounds. But one of the things that we also note with some of these larger public funds is that they're under so much scrutiny, and there's because of their past history, governance issues, challenges, scandals that they've had in the past, there seems to be a reluctance to take any risk at all. So even though on the face of it they appreciate the argument, they buy the motivation, there's just a scare from the public. If something goes wrong, there's a huge hesitation. And I think that's something that asset managers and private equity managers need to sort of work on, I think.
Absolutely. I mean, if you just think, Italy, 1990s, interest rates, domestic bonds, 12, 13, 15%. Go and try and tell them to invest in private equity anywhere. And they would say, why? We take foreign exchange risk, we take illiquidity risk, we take asset class risk, we take reputation risk. When I can sit at home, buy a domestic bond, get 16%, and go to sleep happily. So it's a very tough challenge. And actually, you know, just the question, what do you say to a cynical Ghanaian pension fund, but any pension fund who has the luxury of a domestic bond market that yields great double-digit returns? You just have to wait. And you wait until the bond market is not going to deliver those kinds of returns anymore. And the pension fund managers will need to start diversifying and making their money work harder.
So we're looking about 10, 20 years down the line, if you put a time scale on it? Or
the other thing that we're seeing is a very rapid increase in the funds available for investment, because with the pension reforms that are taking place in many countries, if I just look at Kenya, for example, if the pension reform, the reform of our state fund takes place, it has been delayed, but if it does take place this year or the next year, the pool of money entering the pension system will be than what it has been year on year in the first year alone. Now that's a lot of money looking for a home. So diversification will in itself force a reevaluation, I think, of alternative asset classes.
Which brings up a good point. Can the private equity industry absorb all this capital that potentially could flow into it? And where would the money go? Where would be investment destination of choice for pension funds?
Yeah, I think what we've seen in recent years is an increasing dominance of very large funds. And that's a trend that's not fully compatible with the characteristics of the African market. It's a trend that I can understand because you have more money coming in, and there's also this sense of associating size with quality. But you have to realize that most of the opportunity is in the SME and mid-market segment, which by nature cannot be served well by the huge funds of 800 to 1 billion. So I'm a very big proponent of smaller, mid-sized funds, and they are not competing for the same deals. That's what you see in the larger segment. These mid-market funds, they have their own proprietary deal sourcing. There's still a huge underserved market of fast-growing companies that need capital to expand. So I believe the market can absorb more money, and I'm realistic enough to see that it will come in quite gradually anyway. These numbers of another 20 billion becoming available for private equity, of course, are huge compared to the maximum 2 billion that has been committed to African PE over the last, average per year. So it would be a problem if all the money came available at once, but I don't think we will be faced with that problem.
You both agree on that point, that the private equity industry can absorb all that capital?
So forever, people are saying, you know, there is too much capital chasing too few deals across the world. And I think the only way to answer that question is by looking at whether valuations are going up. And I would agree with Yvonne that at the higher, larger deal size and valuations are going up. And so you have to be doubly and triply careful that if you're not buying cheap, you have to add a lot more value to the company in order to get the returns that you're expecting, or you have to accept lower returns. In the space that Yvonne was mentioning, we are seeing less pressure. But at the same time, we see there is this huge need for capital in Africa. So what is the bottleneck? Where is it not going to work? Why is it going to be dangerous to have 20 billion coming into a continent that probably needs 40 billion, actually? And so I would suggest that the constraint and the bottleneck is in the managerial talent pool. And so if we were able to accelerate the creation of a managerial talent pool, whether indigenous or returning or coming in, to just do what needs to be done, the money will be there, and then we could see a wonderful outcome.
And can private equity firms play a role in this acceleration of talent pool? What role can private equity firms play in this mainstreaming private equity process?
I think they already do. If I look at the private equity fund managers in our portfolio, most of them get very actively involved with their investee companies' management teams, replacing, in some cases, most of the times it's the CFO, getting people from their network to reinforce these management teams, but also, if need be, getting hands-on involved themselves. I've heard of an example where a fund manager hired an IT specialist whose only responsibility was to improve management information systems at their investee companies. So that was, I think, a great example of how you can add value in a very concrete manner. But yeah, it is a challenge, the managerial talent pool at the investee company level, to some extent also, of course, at the fund manager level, because that's the great challenge, I think, to investors new to this market. When you have to select from those 35 new first-time managers in Kenya alone, you have to select the ones that are going to give you a superior performance. What to look at, where to start. You can be certain that not all 35 of them would be qualified. So that's a challenge and a risk, because some people will make the wrong choice. Some funds will get established that do not have the proper quality, and their below standard performance will also be visible to the market and potentially scare off new investors. So I think the industry has a joint responsibility to make sure that only the best managers can raise a fund.
That's a tricky proposition. Sandeep, what do you think? What can private equity firms do?
Yeah, I think, to add to the point that Yvonne has just made, that in addition to getting involved in the investee companies, I think private equity firms, also the GPs, also need to look at relationships with the potential LPs within countries, including the trustees of pension funds, to gain their confidence, to provide the necessary education, because that, I mean, it is happening, but I mean, it's, you see, in many of these countries, the pension funds themselves are still very nascent, and just they're still getting used to the traditional asset classes, bonds, equities, and fixed income. To introduce private equity without a proper appreciation is proving a challenge.
And that raises the question about intermediaries and what they can do, because we heard earlier about how intermediaries may not be helping the African growth story with the UK pension funds. In Africa, what can intermediaries do to help this mainstreaming process? Do you want to take that?
In Africa,
what can intermediaries do in helping the mainstreaming of private equity? How can they work with pension fund managers?
So Sandeep was mentioning education. It's helpful. the role of intermediaries, I think what private equity is doing, can do to help mainstream it, is doing it well. It's aligning the interests. And it's important both from a sort of growth trajectory of the private equity becoming more acceptable and of higher quality. It becomes a potentially virtuous circle. So if you have good private equity investors, they will make good investments, they will generate high returns, they will make it less risky for pension funds to invest in private equity. And at the end of all of this, if all of goes right, then the pension fund investor or the pension fund manager who decides to invest in private equity looks good, and his reputational risk goes away. The private equity intermediary in country will have achieved a 20% carry on a very profitable business and will be very happy. And the company or investee company will have grown 2 or 3 times and will be very happy as well. So if the system overall is aligned with a clear direction, which is making good investment in the right way to generate great returns, then you will mainstream private equity. But the risk that Yvonne alluded to, which is, if done wrong, you lose money, you lose reputation, and you go back and step back, to the prehistory.
Yes.
And do you think that there's a risk that African pension funds are actually going to lose out on this African growth story? Because pension funds in other parts of the world, further developed, may just get in there, and African pension funds may get in too late. Is that a risk, or we're still early days and there's plenty of time for them?
Well, I think Africa today is really at an important inflection point, and because factors converge that really create a good investment opportunity. It's economic growth, demographics, business climate. So I think you really should get ready to come in today, and otherwise, you do miss out. If you stick to listed equities, your coverage of the growth is limited. It's I heard this abbreviation BBC. What is it? Banks, breweries, cement. It's a very limited exposure you get through listed markets. So indeed, I would encourage pension funds to get in now. You asked about intermediation and referring, I think, to asset managers. In private equity, there's an other layer of intermediation that both Vivina and myself are, of course, proponents of. That's a fund of fund structure, which is a very good way for a pension fund that's not familiar with the asset class and with the individual markets to learn about private equity and to get a diversified exposure which reduces the overall risk and which allows the pension fund to benefit from the expertise of a fund manager who has been in this market for much longer and knows much better how to start looking at these 35 Kenyan fund managers to find the best 1 or 2.
Okay, I've just been told there's 5 more minutes, so we can take some quick questions from the audience. Please, feel free to put your hand up and then direct the question at the panelists. Or you might be too hungry.
George.
For a minute there, I thought we might get out 5 minutes early.
My name is George. I work with Africa Invest. I guess my question is what you posed at the beginning. You asked whether there are any pension funds around, and nobody put up their hand. I'm just wondering whether we're having this big talking session about our wife, and she's not even here.
We are.
Should we not do our business differently? I'm looking for Stanley. Should we not do our business differently? I mean, if we really want to attract pension fund money, if we want pension fund managers to take this as a serious asset class, should we not have them here and ask them, why are you not doing this? Shouldn't that be? That's the big elephant in the room.
Absolutely.
Yeah.
Absolutely.
Well, we do have some of them here. But they're a very, very shy and conservative bunch. I think mostly because of the political issues linked with public pension funds. What we do here is quite dynamic, and a lot of people can be direct. And we've told them that we don't have any media here. They can say whatever they want, however they want it. Some of them were able to do so yesterday, if you missed that section. But we do have them here, and they are listening, and they are hearing. A strategy we've sort of developed, the strategy we've sort of developed recently is to go to their homes and knock on their doors. You know, and James has been with us to a few of those. Over the past 5 months, we've been to Ghana and we're knocking. We've been to Nigeria, we've been to Kenya, we've been to Tanzania. Early next year, we'll be going to Zambia, Botswana, knocking at their door, because most of the time, they cannot afford these trips. It's very, very expensive. And but we're doing all that. You were with us in Nairobi, and when we were there, so it will get better. But they are listening. Moreover, everything we're saying here is sort of being documented, and the videos will be sort of prepared and will be circulated to all of them. You guys are free to have access to that as well. But we have our own ways of sort of reaching out to them and knowing what is happening.
Wonderful.
Ideally, I would prefer a room of, on one side there is all pension funds, and on the other side is you guys, and arranging in such a way that you're facing each other and pointing and saying, that was what happened in Nigeria, and hopefully at some point it will happen here.